Rajguru with us, Head of Equity Investments and Strategy at Julius Baer. Rupen, good to have you with us here. I don't know if this has been, if you've thought about this, the AGR issue and how that kind of impacts earnings for the liabilities actually for these companies. And as Ashmit, our colleague, is saying that apparently the government is also going to say no, is saying no.
Okay, hi, afternoon, Prashant. I think, as you said, it's an evolving story, and we have to read through the entire matter in detail. But if you look through, from a listed company's perspective, the second largest listed company, from their perspective, their balance sheet, even if this decision were to be averse, I don't see any significant impact in their overall operations per se. And the overall story in telecom has been the hike in tariffs, which is coming through and which is getting reflected in higher ARPUs for them. And they probably are throwing more than 30,000 crores cash, free cash at this moment. So it should not be an issue there. The issue would be to the other smaller player, in which, as you also rightly pointed out, government in a way is an interested party because they are investor there. So while this relief is not there, whether there is any other moratorium or anything, that time will only say. But per se, from an impact perspective, the large listed player, directly listed player, has no major impact because of this.
Okay, we'll try and just get some more perspective on this in a bit as well, because Vodafone Idea was very clear that they had to look at some sort of further capital infusion, debt infusion, that is, raise that debt capital, and then hopefully pay out the dues. Now, if there's no relief whatsoever on AGR, we need to see how those calculations will play out. The stock has come off. Of course, it was up almost 7-8% in line with the whole mid-cap surge. But now just about, that's Vodafone Idea, just about 3% higher now. So we'll get you more analysis on this in just a bit. But Rupen, let's also talk about the overall market. I mean, I think everyone's wondering, we've had a couple of good days. Last week was all about consolidation. And this week is about, starting to build on some of those gains. Do you think the worst is behind us?
Yeah, hi, afternoon, Surbi. Isn't it market all about, sentiments and liquidity in the short term, and the daily movements in the market do impact our behavior as well. But if you step back and look through, and specifically if you see, what has changed in last 1 month, purely from a market perspective, the US market has seen a significant corrections, and there are reasons we all know about. Probably, I think market is fearing worst, which is recession coming through there. And since US had got significant amount of the share of the global liquidity, in last 4 years, almost 80% of the liquidity into the equity markets went into the US markets. And I think bulk of that liquidity went into the technologies names. So there was this huge skew. So now if the tide is turning there, I think that liquidity can find a place into other markets, and hence sentiment all over. And if you look through, all the international markets are doing pretty well. In fact, in last 1 month, the differential between the returns of US vis-a-vis international equities are as high as 14%. So the point here is that sentiment-wise, things, at least, that adverse liquidity, and from an Indian market, as yet we haven't seen the FPI coming through. But if this kind of sentiment behaves, prevails, we might see it coming back. So net-net, in the near term, a little bit of change we have seen, and we have to definitely look through on the fundamental side. So one of the key reason why we saw correction in the Indian market was higher valuations and lower earnings. So I think the Q4 earnings one has to closely watch out for, because if there is disappointment out there, so some of the action which we are seeing currently, to some extent, I would call it a relief rally, that might fizzle out as the results season comes through.
Okay, all right. It's getting hot, right? And all the sectors and stocks, which there are lots of them, which typically start to run ahead of a summer season or hot summer season. And power is... Rupen, just before we went back to the Vodafone story, Vivek was telling us about power, and just your thoughts on that space and anything you like there.
Prashant, the power entire value chain between, say, 2022 and 2024 had seen a significant re-rating, starting from the utilities, both on the generation as well as on the T&D side, as well as the financiers and all other players in the value chain. So at this juncture, our liking is towards the T&D space. So within T&D, we like the utility on the T&D side, as well as a lot of other players which are suppliers. So which can be players which who have presence on the HVDC side, some of the other equipment side. So we like that space simply because the kind of generations which we are doing, ultimately T&D is a critical element in the entire value chain, and there are few players which has very good order visibility and very good overall revenue visibility for next few years, and are post correction are now trading at a reasonable valuation. So that is the space which we like.
All right, Rupen, we'll leave it there. Thank you very much for joining us with that perspective today. Appreciate it. Well.